Let's welcome on board then Andrew Holland, Naresh Mirani, Kunal Bothra to talk about where they see the markets headed from here. Kunal, did you anticipate this? A very flat start and then this over 200-point fall?
No, not at all. I think we were actually looking out for the index of going to consolidation and remaining into a range. But I think the selling pressure in the first half an hour, first 1 hour was quite brutal in the larger cap names, and especially on the back of the renewed selling which had come back into the auto stocks. I think that spooked the market a bit. Now you have almost 10 stocks out of the Nifty 50 which are trading below their long-term moving averages, 200 moving averages. So I think the number of stocks which are falling below their longer-term moving averages almost on a daily basis, is increasing. So that should act as a pressure point for the index. We're still trading very close to that major support point of 24,750 mark for the index. So I think if we manage to break below this level and close, say by a margin of 1,500 points, 24,650, then I think we could be in for a much more severe downtrend for the indices.
Andrew, did you see this kind of carnage set out or rather anticipate this kind of carnage on Bajaj Auto post its numbers? Andrew?
I think that the two things that came out of it wasn't the numbers per se, it was more the commentary, wasn't it? It's about that the festive season's not, whilst it's kind of picked up a little bit, it's not nowhere near, I think, anyone's expectations. So it's really thrown a whole damper on the whole market because, I think we're all hoping, or the market was hoping that the festive season would start to see, a pickup in consumption. And that's clearly not likely to happen now. And you throw on top of that we anyway expected a weak earnings season across the board. The market valuations doesn't support downgrades, whether it's a company or the sector or the market overall. So I think the market could see if these are kind of earnings continue like this, then you could easily see another 5% correction from here.
Okay, so that's the take coming in as far as Bajaj Auto is concerned. And yes, rest of the market is also suffering in the red. But let's take a look at the broader markets now and see what's happening. Emphasis is actually holding up 6% higher. In the morning, I thought that Street might be disappointed about that deal win number. But no, they're quite excited about the revenue profile and the kind of commentary coming in from the management that the mortgage business is actually bottomed out. So that stock is up 6%. You also have Titagar Wagons, KVB, which is, of course, the result reaction coming in the last few minutes. That stock in the green right now. Hunasa is doing well in the trading session. So a lot of these buzzers from the broader markets, but on the losing side, Oberoi Realty is coming under pressure, KEI continues to bleed, and then Piramal Enterprises too. Andrew, what's your view on consumption? Because yes, premium consumption has been doing well for a while, but over the last few months, the rhetoric had moved to mass consumption, rural consumption. But it seems to be now gravitating again towards premium consumption. What's your view on that?
Yeah, we've been a big fan of the premiumization, particularly of in the kind of alcohol and non-alcoholic business, and I don't think that's going to change. That's going to continue. But again, I think the market's been banking on a number of things. One was rural consumption or spending starting to pick up, and it's not really coming through. Government spending and private capex has not really started to happen. So all of these factors which would, kind of play into your earnings story into the second half of this fiscal is not playing out. And I could throw in many other factors as well of why the markets have seen FPI selling. And of course, we've still got the geopolitical situation tense. And I think the other factor that we have to start looking at now is the US elections. We're only a few weeks away. And that's going to throw its own either surprises or negatives, particularly if former President Trump gets in, because the tariffs he expects to impose, or I said he would impose, could be very bad for US inflation and lower growth. I don't think that's a scenario the market's looking at the moment in that Goldilocks soft landing scenario for the US.
Okay, that's the link between consumption and, of course, what's going on in the world. Let's just take stock of what else has been beleaguered under pressure. And, there's definitely autos and real estate too. Like we just flagged off, Oberoi Realty alone is down about almost 6% as we speak right now. Andrew, once we are out of the festive season, you think within the consumption pack, perhaps retail and consumer durables is what's going to stand out as a winner, or do you see any other categories as well? Because autos clearly is not the case.
I think I'd probably go for more defensive consumption stories than anything else, because whilst the RBI governor was pretty kind of staunch in his views of 7.2% GDP growth. I think we're staring at more like 6.5 to 6.7% GDP growth, and that's a big slowdown. So unless there's some monetary policy which will help, I really don't see this picking up so quickly. So I think there's a problem for GDP growth, and I think that's then that will spill over into consumption. So I think you've got to be very careful of what you're buying and why you're buying at the moment, because I think that some of the themes will continue to play through. But in between that, you've seen it from the likes of Dabur and so forth. The margins are under pressure, and that's not going to go away from you. And I think that's the story: is a margin pressure that you're going to see across all companies this earnings season.
Still status quo really, although one must say that we're kind of the world laggards today. While it was a 1% downfall for Shanghai, but that market is extremely distinct and reacts to very different kind of news flow. Yes, Hong Kong as well was lower by about 1%, and that's over 200 points. But there you have the Nifty, which has also fallen over 200 points. Europe is actually not all that bad at all. In fact, some of those markets are holding out very smartly, while Nestle has cut their full year guidance. But you've got the DAX as well as the CAC, in fact, higher in trade right now. 1.25% of an uptick coming in for the CAC. DAX holding up almost about 170 points. Even the broader markets like the Stock 600 are up about almost 0.5% as we speak. So very distinct than what the Western markets at least are doing. And for now, the US futures as well are marginally higher. In fact, if nothing, the NASDAQ is actually scaling higher by nearly about 150 odd points. But that said, while autos as well as real estate continue to be the pressure points, let's welcome on board CA Rudramurthy as well and find out what he's making of the market right now. Rudra, let's pick up on autos specifically. Do you see further pressure coming in for a Bajaj, Hero MotoCorp and even M&M for that matter? They are the weakest links amongst the auto majors right now.
See, for me, yes, whatever happened post the results and the correction of about 10 to 12% in Bajaj Auto can just continue for another 2 to 3% kind of a move on the downside. Long-term support for this stock is at around 9,400, 9,500 zones. So I may not advocate a shorting at current market price or after a fall of 10 to 12%. However, yes, if someone wants to bottom fish and have this stock to your portfolio, wait for those levels of another 3 to 5% kind of a correction, and one can definitely buy at those levels. And if you see even Hero MotoCorp as well as even stocks like TVS Motor, similar chart patterns are seen. But however, shorting earlier would have been better. At this current market price after this fall, I will not advocate a shorting here. Rather wait for another 2-3% kind of a move on the downside, and then it will be a better risk reward to buy at those levels than shorting here.
Point taken. In the meantime, let's take stock of Tata Communications and Havells. Both came out with earnings. For Tata Communication, it's a miss on the bottom line because we were working with a number of 267 crore. The actual number for Tata Communications has come in closer to 227 crore. Even though on the top line, it's largely in line with expectation. Don't see any major exception other than a 43 crore exceptional that they have, but overall looks like a weak set. And for Havells as well, it's a disappointing set yet again. It seems like in terms of the bottom line as well. And if you look at the individual segments, Lloyd's has reported a loss yet again. There's a 25 24 crore loss coming in for Lloyd. On a year-on-year basis, there's a decline in terms of profitability of the switchgear business, of the cable business. Even though the revenue of cable business has gone up, there's a pressure on the profitability, which clearly means that margins of the cable segment are under pressure, and this is exactly what panned out with KEI as well. And for the last couple of days, we have seen that pressure in KEI stock. Even lighting and fixtures has not done too well. Electric consumer durables is down both in terms of quarter-on-quarter and year-on-year basis. So Havells clearly taking it on the chin. In fact, if I can get you here, Andrew, to talk about Havells and consumer durables specifically, because this is one stock which time and again has disappointed with earnings. Maybe one quarter it performs okay, and then the next couple of quarters are again weak, and it hasn't been able to come out of that entire limbo. But the stock still continues to hold steady. I mean, apart from those one-day blips that come, here also there's a bit of a buying on bottom. How would you, recommend people to invest in Havells, if at all?
Well, I mean, I haven't seen the numbers. I've just seen them flashing on your screen. So it seems as though it's the margin problem again, and I think you'll see this will be across the industry. So I don't think it's a one-off for just this company. I just really want to emphasize that it will be a margin story this this earnings season, and I think all we're talking about is the pressure on margins and how that can be relieved. So I don't think whether it's one stock or it's a whole sector, I think you're just going to find that it's going to be disappointing, and I don't think there's anywhere to hide at the moment, and that's the problem. I think the only way to hide is to hide in a bit of cash. So, I think increasing your cash levels for the next few months wouldn't be a bad idea, given with, earnings aren't going to help you. You've got US elections and you've got geopolitical problems. And plus, we expect China to do another stimulus. All of that plays badly for India in the short term.
A lot of moving parts right now. It's best to stay and hide in cash. That's the word coming in from Andrew. But Kunal, would you have a view on Havells and Tata Communications? Both have disappointed with their earnings.
Yeah, I think Havells has given a breakdown, fresh breakdown. So today the stock has managed to break below its 5-7 day swing low. I think it was trading close to that 1900, 1950 levels for the last 8 to 9 days. But then I think today the stock has managed to confirm that break, as well as a break below its the 50-day moving average. So I believe that the next course of price action could be on the downside for the stock. But looking at today's volume, I believe that the extent of downside could be a bit more restricted and not be as huge, like a double-digit kind of a correction for the stock. So maybe another 3%, 4% correction on the downside, which could take the stock back towards 1775, 1780 odd mark. So that could be a good point to try and re-enter the stock. That would also coincide with the 200-day moving average. Tata Communication, on the other hand, this could be an interesting play because the stock is trading exactly at its 200-day moving average today. It's been an underperformer of sorts over the last 2-3 months. The stock went through a correction from 2,150. That was a high I think the stock had made. It's corrected almost 300 points. So which means we could be looking at a point where the stock could probably find a bottom pretty soon. So I think 1800, 1850 could be a good range to go for a contraband Tata Communications.
Okay, that's the take coming in on Tata Com and where those figures would be headed right now in trade. But let's also get you the management of KEI, and they spoke about their margins as well as guidance after posting a steady set. Hear it out from Anil Gupta, the CMD.
We can't give such a long range guidance. We have already guided that this year we expect to do around 10.5 to 11% overall EBITDA in the full year. So our guidance remains same. If we are able to do better, we will definitely aim. We have already given a guidance of a top line growth of 15 to 17% in overall in the full financial year, and we are on track.
Right, okay, Andrew, great to have you on the show. We'll let you go on that note. Thanks as always for joining in with your views. Half an hour into the last lap of today's trade, investor down a good 200 points on the index alone. And of course, it's coupled with a very bad breath. Only 17 stocks actually within the F&O basket are standing to the green. Rest all 167 in the red as we speak right now. Let's get in some closing strategies then on that note. Rudra, what's on your list?
See, for me, SBI looks very strong, and in a weak market like today, it has given a very short-term break above 808. and staying above those levels in a weak market tells to me that more steam is left on the upside for SBI. So I will be a buyer in SBI looking for initial target of 835 to 850, and one can have a stop loss for this long call at 795.
Now, what about your strategies?
I'll go with the buy on India Mart. That's a chart which has been holding up pretty well, forming a bullish flag formation and recovered quite well from the intraday lows of 29.80, 29.85 on the spot levels. So it looks attractive and could look out for targets in the range of at least 31.20 to 31.50 for India Mart.
Okay, on that note, let's take a very quick break. Still down a good 12.5% for Bajaj Auto. We'll continue tracking markets on the other side.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.